Master Script. Understanding Global Finance, Markets, and Economic Forces. Introduction in the modern world. Finance is not just a subject limited to bankers, economists, or large corporations. It is a powerful force that affects every individual, every business, and every nation. From the price of fuel at a local station to the cost of food in markets, from job opportunities to global trade agreements, everything is deeply connected to financial systems. Financial information platforms such as Bloomberg, CNBC, and other global networks provide real-time insights into how the world economy is functioning. They analyze trends, track changes, and explain the forces shaping financial markets. Understanding these systems is essential for anyone who wants to succeed in today's interconnected global environment. This script provides a complete and structured explanation of financial markets, economic systems, global trade, investment strategies, and the forces that influence them. It is designed to educate, inform, and build a strong foundation in finance. Chapter 1. The foundation of finance is the management of money. It includes saving, investing, borrowing, and spending. At a basic level, finance answers three important questions: how money is earned, how money is spent, how money is saved or invested. Finance exists at three levels: personal finance, corporate finance, public, government finance. Personal finance deals with individual money management, such as budgeting and saving. Corporate finance focuses on how businesses raise and use funds. Public finance involves government spending, taxation, and economic policies. Chapter 2. Financial markets. Explain. Financial markets are places where financial assets are bought and sold. These markets are essential because they connect investors with businesses and governments that need capital. There are several types of financial markets. Stock markets allow companies to raise money by selling shares. Investors buy these shares hoping the company will grow and increase in value. Bond markets allow governments and corporations to borrow money from investors. In return, they pay interest over time. Commodity markets deal with physical goods, such as oil, gold, and agricultural products. Foreign exchange markets, also known as Forex, involve the trading of currencies. These markets operate globally and are interconnected. A change in one market can quickly affect others. Chapter 3. Stock markets and investment. Stock markets are among the most popular financial markets. They represent ownership in companies. When an investor buys a stock, they become a partial owner of that company. If the company grows and becomes profitable, the investor benefits. Stock prices change based on supply and demand. If more people want to buy a stock, its price increases. If more people want to sell, the price decreases. There are two major market conditions. A bull market is when prices are rising and investor confidence is high. A bear market is when prices are falling and uncertainty dominates. Successful investing requires patience, research, and discipline. Chapter 4. Economic indicators. Economic indicators are statistics that help measure the health of an economy. Gross domestic product, GDP, measures the total value of goods and services produced in a country. Inflation measures how fast prices are rising. Moderate inflation is normal, but high inflation can reduce purchasing power. Unemployment rate shows how many people are actively looking for jobs but cannot find them. Interest rates are set by central banks and influence borrowing and spending. These indicators are closely monitored by investors, businesses, and governments. Chapter 5. The role of central banks. Central banks play a crucial role in maintaining economic stability. They control monetary policy, which includes managing interest rates and money supply. When inflation is high, central banks increase interest rates to reduce spending. When the economy is slow, they lower interest rates to encourage borrowing and investment. Central banks also regulate financial institutions and ensure stability in the banking system. Chapter 6. Global trade and economics. Global trade connects countries through the exchange of goods and services. Countries export goods they produce efficiently and import goods they need. This creates interdependence between nations. Trade agreements reduce barriers such as tariffs and make it easier for countries to trade. However, trade can also lead to conflicts, especially when countries compete economically or impose restrictions. Global trade plays a significant role in economic growth and development. Chapter 7. Commodities and Energy Markets. Commodities are raw materials that drive the global economy. Oil is one of the most important commodities because it powers transportation and industries. Gold is considered a safe investment during uncertain times. Agricultural products such as wheat and rice are essential for food supply. Commodity prices are affected by supply and demand, geopolitical events, and natural disasters. Chapter 8. Currency and Forex markets. Currencies are traded in the foreign exchange market. This is the largest financial market in the world. Currency values fluctuate based on economic conditions, interest rates, and political stability. A strong currency indicates a strong economy, while a weak currency can signal economic challenges. Forex trading is complex and requires deep understanding and strategy. Chapter 9. Technology and Finance. Technology is transforming finance in unprecedented ways. Digital banking allows people to access financial services from their phones. Artificial intelligence is used to analyze markets and predict trends. Blockchain technology enables secure and transparent transactions. Cryptocurrencies are a new form of digital assets that operate without central control. Fintech is making financial services more efficient and accessible. Chapter 10. Investment strategies. Investing is not about quick profits. It is about long-term growth. There are different strategies. Value investing focuses on undervalued stocks. Growth investing focuses on companies with high potential. Income investing focuses on dividends. Diversification is key. Investors spread their money across different assets to reduce risk. Risk management is essential to avoid major losses. Chapter 11. Risk and uncertainty. Every financial decision involves risk. Market risk occurs when prices fluctuate. Credit risk occurs when borrowers fail to repay loans. Liquidity risk occurs when assets cannot be quickly sold. Understanding risk helps investors make better decisions. Chapter 12. The impact of geopolitics. Global events have a direct impact on financial markets. Wars can disrupt supply chains and increase prices. Political instability can reduce investor confidence. Trade conflicts can affect global economies. Markets react quickly to news and events. Chapter 13. Inflation and cost of living. Inflation reduces the value of money over time. When prices rise, people can buy fewer goods with the same amount of money. Central banks try to control inflation through monetary policy. High inflation can lead to economic instability. Chapter 14. The future of finance. The financial world is constantly evolving. Digital currencies may become more widely accepted. Artificial intelligence will play a larger role in decision-making. Global markets will become more interconnected. Understanding these changes is essential for future success. Conclusion. Finance is the backbone of the global economy. It influences every aspect of life, from individual decisions to international relations. By understanding financial systems, markets, and economic forces, individuals can make informed decisions and build a secure future. The world of finance may seem complex, but with knowledge and awareness, it becomes a powerful tool for growth and success. As financial systems continue to evolve, it becomes increasingly important to understand not only the structure of markets, but also the behavior of participants within them. Human psychology plays a major role in financial decision-making. Investors are not always rational. Emotions such as fear and greed often drive market movements more than logic or data. During periods of rapid market growth, investors may become overly optimistic. This is often referred to as a speculative bubble. In such situations, asset prices rise far above their actual value because people believe prices will continue to increase. Eventually, these bubbles burst, leading to sharp declines and financial losses. On the other hand, during economic downturns, fear can dominate the market. investors may panic and sell assets at low prices, causing further declines. Understanding these emotional cycles is essential for long-term success in finance. Another critical aspect of modern finance is the role of institutional investors. These include banks, insurance companies, pension funds, and hedge funds. Unlike individual investors, institutional investors manage large amounts of money and have a significant impact on market trends. Their decisions can influence stock prices, interest rates, and even entire economies. Hedge funds, for example, use advanced strategies to generate high returns. These strategies may include leveraging borrowed money, short selling, and trading complex financial instruments. While they can achieve high profits, they also carry substantial risks. Pension funds, on the other hand, focus on long-term stability. They invest money on behalf of individuals to provide income after retirement. Their investment strategies are usually conservative and diversified to ensure steady growth over time. Insurance companies also play a key role in financial markets. They collect premiums and invest those funds to generate returns. This helps them meet future obligations when claims are made. The banking system is another pillar of the financial world. Banks act as intermediaries between savers and borrowers. They accept deposits and provide loans to individuals and businesses. This process supports economic growth by enabling spending and investment. Commercial banks handle everyday financial activities, such as savings accounts, loans, and payment services. Investment banks, however, focus on large financial transactions, including mergers, acquisitions, and raising capital for corporations. In recent years, digital banking has transformed how people interact with financial institutions. Online platforms allow users to transfer money, pay bills, and manage investments without visiting physical branches. This has increased convenience and accessibility, especially in developing regions. Another important development is the rise of financial inclusion. Millions of people around the world previously had no access to banking services. Mobile technology and digital wallets have made it possible for them to participate in the financial system. This has a positive impact on economic growth and poverty reduction. The concept of credit is also central to finance. Credit allows individuals and businesses to borrow money with the promise of repayment. It enables people to make large purchases, such as homes and vehicles, without paying the full amount upfront. However, excessive borrowing can lead to debt problems. When individuals or governments accumulate too much debt, it can create financial instability. Managing debt responsibly is crucial for maintaining economic balance. Financial crises are extreme events that disrupt the entire financial system. They are often caused by a combination of factors, including excessive risk-taking, lack of regulation, and economic imbalances. One of the most significant financial crises in history was the global financial crisis of 2008. It began with the collapse of the housing market in the United States and quickly spread to other parts of the world. Banks failed, markets crashed, and millions of people lost their jobs. This crisis highlighted the importance of regulation and oversight in financial markets. Governments and regulatory bodies introduced new rules to prevent similar events in the future. These include stricter capital requirements for banks and increased transparency in financial transactions. Regulation aims to protect investors, maintain market stability, and ensure fair practices. However, too much regulation can also limit innovation and growth. Finding the right balance is an ongoing challenge. Another important concept in finance is financial literacy. This refers to the ability to understand and use financial information effectively. Financial literacy empowers individuals to make informed decisions about saving, investing, and spending. Without proper knowledge, people may fall into financial traps such as high-interest loans, scams, or poor investment choices. Education plays a key role in improving financial literacy and promoting economic well-being. In the modern era, data has become one of the most valuable resources in finance. Financial institutions use large amounts of data to analyze trends, assess risks, and make decisions. This is often referred to as data-driven finance. Artificial intelligence and machine learning are increasingly being used to process this data. These technologies can identify patterns that humans may not notice, allowing for more accurate predictions and better decision-making. However, the use of technology also raises concerns about privacy and security. Cybersecurity has become a major issue in the financial sector. Hackers target financial systems to steal money or sensitive information. Protecting data is essential to maintain trust in the system. Sustainability is another emerging trend in finance. Investors are increasingly considering environmental, social, and governance factors when making decisions. This approach is known as ESG investing. Companies that focus on sustainability are seen as more responsible and potentially more stable in the long term. This shift reflects a growing awareness of global challenges such as climate change and social inequality. Green finance is a related concept that focuses on funding projects that benefit the environment. This includes renewable energy, clean technology, and sustainable infrastructure. As global challenges continue to evolve, finance will play a critical role in addressing them. Governments, businesses, and individuals must work together to create a more sustainable and inclusive financial system. Another area of importance is entrepreneurship and startups. New businesses drive innovation and economic growth. However, starting a business requires access to capital. Venture capital firms provide funding to startups with high growth potential. In return, they receive equity in the company. This creates opportunities for both investors and entrepreneurs. Startups often operate in uncertain environments and face high risks. However, successful startups can transform industries and create significant value. Financial planning is essential for both individuals and businesses. It involves setting goals, creating budgets, and managing resources effectively. For individuals, financial planning includes saving for education, buying a home, and preparing for retirement. For businesses, it involves managing cash flow, controlling costs, and planning for expansion. Long-term planning helps reduce uncertainty and improve financial stability. Another key concept is taxation. Governments collect taxes to fund public services such as healthcare, education, and infrastructure. Taxes can influence economic behavior. For example, lower taxes may encourage investment, while higher taxes may reduce spending. Understanding taxation is important for both individuals and businesses to ensure compliance and optimize financial outcomes. Globalization has made financial markets more interconnected than ever before. Events in one country can quickly affect markets in another. This creates both opportunities and risks. Investors can diversify their portfolios by investing in different countries. However, they must also consider factors such as exchange rates, political stability, and economic conditions. In conclusion, finance is a dynamic and complex field that continues to evolve with time. It is influenced by technology, human behavior, global events, and economic policies. A deep understanding of finance allows individuals to navigate uncertainty, seize opportunities, and build a secure future. As the world becomes more interconnected, financial knowledge will become even more important for success in both personal and professional life.